Sebiji. Alah
Income
bodoh.
items are expressed as percentage of sales. Balance sheet items are expressed as a percentage of total asset or total liabilities. So basically, common size analysis or common size statement analysis is an analysis for each items from income statements and items from balance sheet. As stated in the slide, items from income statement will always be presented in or as a percentage of sales, whereas items from balance sheet will be presented as percentage of total asset or total liabilities. So horizontal analysis will compare the two financial statements, which is income statement and balance sheet, to determine the absolute change as well as percentage changes. So we will go through some examples. So this is the common size analysis horizontally and vertically. This is for income statement. So this is the horizontal analysis. This is vertical analysis. So what do we mean by horizontal? So let's look at the example lah. So for horizontal analysis of the income statement, so let's say we will compare between the 2021 and 2020's income statement. So we will look at the sales, cost of goods sold, gross profit, expenses, and net income. So for the horizontal analysis, it put some notes here. Although sales and gross profit increase in dollar amounts, net income decreased slightly from 2020 to 2021. This net decrease resulted because cost of goods sold increased and at a faster rate than sales. So the cost of goods sold increased by 16%, whereas the net income decreased by or increased by 14%. So this is how they do the horizontal analysis. So this is the amount of sales for 2020, 3,200 ringgit, and then this is the amount of sales in 2020, which is 2,800 ringgit. So there will be an increase of 400 ringgit between the sales in 2021 and 2020. But if you look at the cost of goods sold, in 2020, the cost of goods sold is 2,150, whereas in 2021, the cost of goods sold increased from 2,150 to 2,500 ringgit. So there is a 350 ringgit increase in terms of cost of goods sold between 2020 and 2021. So if you look at the gross profit, 2020 we have 650 gross profit, And in 2021, the amount of gross profit is only 700. So there are still 50 ringgit increase in terms of gross profits. In terms of expenses, there are some increment in terms of expenses. 2020, the amount of expenses is 533, but in 2021, the amount of expenses is 584. So there are 51 ringgit increase if we compare to between these 2 years. So in terms of net income, so in 2020, we managed to produce 117 net income, but in 2021, our net income is only 116. So I'm not sure whether you still remember or not. When we do our accounting and financial management, in fact, when we start doing this subject a few weeks ago, I did mention that as far as profit margin is concerned, in order to increase our profit margin, in order to increase our net income, we need to increase our sales, but at the same time, we need to decrease or reduce our expenses. So in this example, if you look at the figure from 2020 and 2021, even though the amount of sales for 2021 increased, but at the same time, the expenses also increase. So that's why we end up getting a lower net income compared to 2020. Because in 2020, yes, our amount of sales is not that high, but our expenses is also low. So that's why we managed to get 170 net income. But as we move to 2021, even though our amount of sales is increased from 2008 to 3002, but our expenses and the cost of goods sold also increase. So cost of goods sold and expenses will affect our net income. So the company has to be very careful in order to increase our net income. We need to increase our sales, but at the same time, we need to decrease or reduce our cost of goods sold and reduce our expenses. So by reducing our cost of goods sold and expenses, only we can manage to increase our net income. So let's move to vertical analysis. So vertical analysis, we look at the same year, 2020 and 2021. The only difference between horizontal and vertical, for horizontal, we measure the performance in monetary form, in dollar, in ringgit. But when we do the vertical, we put it in percentage. So we start with sales. Sales, we start with 100%. So we will deduct the cost of goods sold, and then we will deduct the expenses. So we net, then we will get our net income in the form of percentage. So this is how the common size analysis is done on the income statement. So normally it has to be a comparison between a few years performance for the company. So in this simple example, we will only compare between 2 years, which is 2020 and 2021. But I guess in this example, it is not realistic lah, because we don't we are not in 2021 yet, kan? By right, the example should use 2020 and 2019 to be more realistic. But never mind. In this example, we put as 2021 and 2020. the years is not really important. What is important is you guys know how to do the vertical and horizontal analysis for common size analysis. Please bear in mind, for common size analysis, it will be done for income statement and balance sheet of the company. So this is how lah the this is an example on how do we compute or we get the percentage for a vertical, and then this is how when we put it in a table form, we compare between years and years. As you all aware, for business valuation purposes, we are always doing analysis for the past 3 years performance. So that's why in this table they put performance for 3 years. But for the example of calculation just now, we only use for 2 years, because this is just to show you the differences between these 2 years performance. But when we put it in table, in reality by right we should do for 3 years analysis. In fact, in some cases we may need to do analysis for the past 5 years, but in normal situation 3 years is enough. So this is how lah we do the verticals. How do we get the percentage is from the previous slide lah, as apa ni, as shown in the slide. So we take this figure 2,800 as the 100% punya percentage, and then 2,150 from 2,800 represent 77%, and then 650 from 2008 is 23%, 533 from 2008 is 19%. So the remaining is 4% only. So again, it will be the same for 2021. Has anybody checked the figure? Is it correct? 2150 from 2,800 is 77%. Has anybody do some calculation on to check the percentage, whether it is correct or not? So you do some apa ni lah. So this is how we present. So we need to get the data. So from the horizontal analysis, then we will prepare the vertical analysis. So before you can do vertical, you need to do the horizontal first. Horizontal is very straightforward. You just copy paste whatever figure reported in your income statement in this form. So after that, you convert into percentage, and then when you want to compare between different years of performance, you put in this format the base year that you want to compare, year 1, year 2, year 3, and you just list down the element of items from income statement that you want to compare between different years. So all this data or figure you can get from income statement. Figure for revenues, for cost of goods sold, for gross profit. So this is figures for operating expenses. This is figure for total operating expenses. This is figures for other type of expenses. Then you will get your income statement. So when you total up all these figures, it has to be 100% balik lah. Like this one kan, 55.64 plus 44.36, you will get 100%. And then when you add all these figures, you should be able to get 100%. So again, this is the same example on horizontal and vertical. Just now, vertical and horizontal for income statement. So this one is for balance sheet. Again, for horizontal analysis, it will be presented in monetary form. So you just copy whatever figure you may get from your balance sheet. And then for vertical analysis, you need to convert the amount into percentage. So it will be the same. So this is the in monetary form, 984. So it will be then converted into percentage. Where do we get the percentage? So 984 divide by 2112 times 100. So we will get 46.6%. So for PPE asset or fixed asset or non-current asset, so you get the figure 1128 divide by 2112 times by 100, you will get 53.4%. So if you add on these two, so you will get 100%, which is 2112. So same with 2021 figure. So the concept on how to calculate the percentage for current liabilities is same with on how you calculate the current asset. So the amount of current liabilities divide by the total amount of liabilities, you times by 100, you will get your current liabilities is 43.4%, and then your equity and long-term liability 1195 divided by 2112, then you will get 56.4%. So if you look at the total here, the total for asset and the liability has to be equal. So that's why the total for asset is 2112, and then the total for liabilities and owner's equity is also 112, because we will be based on the accounting equation. Or if you look at the accounting equation, stated that asset is equal to liabilities plus owner equity. So that's why the amount here has to be the same amount. This is the amount of total asset. This is amount of total liabilities and owner equity. So this is in monetary form. And if you look at the real company, it has to be million lah, kan, or million or billion worth of transaction. But in this example, we use a very simple example, so that's why we use only a few hundred ringgit, kan. Can you guys still see the slide? Pasal tadi I admitkan si Fawaz, so kadang-kadang dia akan affect your slide tu. Kadang bila I admit somebody, you couldn't see the slide that I shared with you. So again, we need to do the analysis in the table form for 3 years performance. But yang in this example ni, we just put 2 years, kan. By right it should be 3 years. And then you can measure lah the changes between years. So we by doing that, we may know lah whether our company is doing okay or not, as far as the business performance is concerned. So we normally do analysis for the past 3 years. But if the economy is not stable, so we may need to do up to 5 years analysis. So but it doesn't matter whether you have to do it for 3 or 5 years. The concept, the principle is about the same. You look at the income statement and look at the balance sheet, get whatever amount or figure that has been reported in balance sheet and income statement to do horizontal analysis. So from the horizontal analysis, you will then convert the figure into percentage to do the vertical analysis. So after you have done the vertical and horizontal analysis, you shall do the a comparison in the table form to get a clearer pictures if there any difference between the years that you are comparing to. So by putting all the figures in the same table, then you can get the whole pictures lah, whether the sales is increasing or decreasing. Like this one, if you put it side by side, then you can see lah. Our sales are decreasing. In 2014, amount of sales is 500,000, but in 2015 it reduced or decreased by 25,000 to only 475 in 2015. So if we measure by percentage, so it has 5% decrease from 2014 to 2015. So as far as the cost of goods sold is concerned, again, the trend shows some decreasing trend. So in 2014, the amount of cost of goods sold is 269, but in 2015 is 265. So as far as the cost of goods sold is concerned, kan, the decreasing amount from 2014 to 2015 shows a positive movement because you managed to reduce. But in terms of sales, it is a negative sign because by right, you should increase your sales and try to decrease the cost of goods sold. But in these examples, we have decrease in both sales amount and cost of goods sold amount. So as a result, we will get decreasing in gross profit as well. So in 2014, the amount of our gross profit is 231,000, and in 2015 it decreased to 210,000. So by percentage, it is a decrease of 9%, 9.1%. So you may need to go to very details lah, the wages, repairs, blah 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 semua. So this is the vertical analysis for balance sheet. Kan? So ini bukan balance sheet ni. Is it balance sheet or income statement? Can you get all these figures from balance sheet?
Cannot
kan? So we need to amend lah this topic. Sepatutnya ini adalah horizontal for income statement because the data for sales blah blah ni you can only get from income statement. So that's why you need to be very careful kan. If you understand the topic sebenarnya, any of you may have alert me, sir, the topic is correct. It is not correct. It's supposed to be income statement kan, not balance sheet. So we need to correct this one lah. It has to be income statement. Balance sheet you cannot get the data. This data you cannot get from balance sheet. This data comes from income statement. So don't worry, I will correct the heading before I upload the slides in Spectrum. So after you have conducted or compute all the CSA analysis horizontally and vertically, then you may need to do some normalization of financial statements. CSA stands for apa tadi? CSA apa? Common size analysis. So after you have done your common size analysis for the past 3 or 5 years, horizontally and vertically, at the end of the exercise, you may need to do some normalization of your financial statements. So financial statements normalization involve adjusting non-recurring expenses or revenues so that it only reflects the usual transactions of the company. Financial statements often contain expenses that do not constitute the normal business operations and that may hurt the company's earning. Hurt ni maksudnya affect lah, may affect the company's earning. So the purpose of normalization is to eliminate such anomalies and provide accurate historical information that enables reliable comparisons and forecasting. So after we have done the horizontal and vertical CSA, we may need to do some adjustment, some normalization on some of the items that we have analyzed horizontally and vertically before. So common size analysis. That's why we call it common size analysis. So what is the purpose of normalization? So this is the purpose of normalization lah. To create a presentation of the entity's financial performance in a what if scenario of optimal or normal operation. So we may need to do the normalization in order to create the what if scenario. So the normalization is useful for comparing two similar entities in the similar industries. So remember kan, last week or 2 weeks ago, I did mention that when we do the analysis for our financial statement, we not only restrict the analysis on our company's performance only. We will also compare the performance of our company between our competitors in the industry. So you may need to gather information from the similar company or entities within the same industries. So the comparison punya the comparison activities is to measure where is our to measure our performance as compared to our competitors in the industries. Because we don't want to be short sendiri lah kan. If you're not comparing your performance with the competitors in the industries, you may feel that we are already okay. But after comparing your performance with your competitors in the industries, you may find that you are far behind within the industries as compared to the other companies. So maybe some of the company is bigger than you. Some of the companies in the industries may produce a higher profit than your company, or maybe your competitors in the industries has lower expenses as compared to your company. So that's why we need to compare the performance of our entities or our companies with the same entities or companies in the same industries. So let's say you are a manufacturing company, so you may need to compare your performance with the manufacturing companies within the same industries. You cannot compare your performance with the industries which is outside your industry. So let's say if you are the food manufacturing company, you may need to compare with your competitors within the food manufacturing industries. You cannot compare, let's say if you are in the food manufacturing industries, you cannot compare your company with any companies from financial industries. So because it will be not comparable, kan? You need to compare apple to apple. You cannot compare apple to orange. Same with when you are doing your business using comparison method. You need to make sure that the comparison that you choose is similar in nature. So if your company involved in certain type of industry, you need to find the same companies, your competitors within the same industries. So the comparison between your companies and your competitors within the same industries is also very useful for benchmarking purposes. So you need to benchmark your company. Where are we within the industries? So by doing so, you may know lah what your position within the industries. Same with UM lah kan. Every year we keep increase our ranking. So by increasing our ranking tu, we may know lah whether we are doing okay or not. So normally benchmarking is very useful for the company to know their real performance as compared to other competitors within the same industries. So another purpose of normalization is useful for calculations of value for purchase or sale purposes, as well as obtaining investment or debt capital. So this is among the purpose of normalization when we do CSA analysis, common size analysis for the company and the same company within the industries. So far, anybody has any questions to ask? Do you have any questions to ask before we proceed to the next slide? Lavia muka macam tak faham je. Do you have any question? Okay. Chua okay. So if everybody is okay, we will proceed lah. So this is just now is the purpose of normalization. This is normalizing adjustment. So here are some examples of normalizing adjustments. So you may need to adjust the owner's salary, or you may need to adjust on the rental income or rental expenses, or you may need to adjust of any of non-recurring expenses or income, or you may need to adjust extraordinary events. So we cannot tell you exactly what type of elements or what type of expenses or income that you need to adjust. It depends on the situation. So that's why when you are comparing your company's data with other companies within the same industry, then only you would know which elements or which items that you may need to do adjustment, or you need to do some normalization so on the item. So this is only some of the example that you may need to do some normalizing adjustment with regards to your income statements and your balance sheet after you have done your CSA analysis. So remember, CSA analysis has to be done horizontally and vertically. When you are doing the analysis, horizontally, meaning that you are comparing the figure between different years. But when you are doing it vertically, you will convert the figure to percentage. Then you can measure lah whether it is an increase or decrease among the different years figures. So you need to do CSA for your income statement and CSA for your balance sheet, both vertically and horizontally. So in this example, you may find that it looks easy, right? But when you are doing the real business valuation cases, it may not as easy as you see in the examples that I've just shown you in the slides. A few previous slides. So when you are doing the real case business relation, it may be more complicated as what you have seen in the slide that I've just shown to you just now. So because what we teach you is a very basic concept or principles on how to do business valuation. Same with your real estate valuation lah. When you are doing a topic on real estate valuation in class or during lecture, it may looks very easy kan. For example, when you are valuing a property using comparison method in class with Gani or Ain'ni, it may looks very easy. But when you are in the industries after graduating from this course, you may find that the case that you are handling may not be as simple as the one that your lecturers show you during lecture. During lecture, most of the cases shown to you is a very simple cases, just to make sure that you get the basic principles or theories on how to do valuation. But when you are doing the real case out there, it may not be as simple as you have learned during your lectures. So this is the details examples of normalizing adjustment that you may need to do with regards with your business valuation. So for owner's salary and expenses, in most private companies, the owners have the discretion over the amount of salaries and allowances that they may draw from the company's account. So let's say from the comparison, you find out that the amount of owner's salary and expenses for your company is a bit higher compared to the same companies within the industry. Then when it comes to normalizing adjustment, you may need to decide to reduce the amount of owner's salary and expenses for your company. So that's what it means by normalizing adjustment. The process is to ensure that the amount which is reporting for your company is at par with other companies within the same industries. So let's say if the amount of salaries for owner within the industry is 10,000 per month, but your company is currently paying 20,000 per month as your owner's salary. So you in that sense, you may need to reduce your owner's salary to 10 to 12,000 to make it normalized with other companies within the same industries. So that's what it means with normalizing adjustment. So same with the owner's personal expenses. So we don't need to spend more time with the same concept. So as far as rental expenses or income expenses is concerned, it is also the same concept. If you find out that the amount of rental expenses or income expenses for your company is lower or higher than the industry, you may need to adjust to make it at par with the other companies within the same industries. So that's why we mean by normalizing, to make it equal or at par with the same industries. So adjusting the rental expenses to reflect the prevailing market value will help normalize the financial statements. Also, where the company earns a rental income from its property which does not constitute a part of the company's core business operations, this income should be eliminated from the financial statement. So you may need to look at the situation now, whether you have to add or you have to reduce the amount. It depends on the case by case situation. So when you are doing the business, you may come across the different situations for different type of companies or different cases that you are handling as far as your business valuation is concerned. So this is the normalizing adjustment for non-recurring expenses. This is normalizing adjustment for extraordinary events, whether it is unusual gains or losses that materially affected the company's finance. So you may need to do some adjustment. So this is the example on how this is an example on how the normalizing adjustment could be done. So this is the example lah. So in this example, the types of normalizing adjustment which is done is on this litigation settlements. The selling. This is the example of normalizing adjustment that is done on this company. So this is the normalizing adjustment for other considerations. So the previous few slides is discussing on the normalizing adjustment for income statement. So this slide is talking about normalizing adjustment for balance sheet. So this is the items that you will find in your balance sheet. So for instance, cash. So for cash, you may need to do some normalizing adjustment on your cash when you do the CSA on your balance sheet, and then you compare the CSA for your companies between with the CSAs on the same companies within the same industry. As far as the cash is concerned, maybe you need to adjust cash in excess of operating needs or consider as a non-operating asset. So you may need to adjust the amount from your balance sheet. So for marketable securities, you may need to adjust the fair market value when and if it is appropriate. Same with inventory, excess inventory, fixed asset, and real estate. You may need to some normalizing adjustment on this aspect from your balance sheet after you have done your CSA horizontal and vertical adjustment for your balance sheet. For some company, maybe you don't have to do any normalizing adjustment at all. Depends on the situation, it depends on the company, it depends on the industry. So that's why it is very crucial for you when you are doing your business relation, after you have compute or after you have done your CSA, common size analysis, for your income statement and balance sheet, then you need to decide whether there is a need or not to do a normalizing adjustment. So, what is a justification to decide whether normalizing adjustment is needed or not? So, it depends on the result of your analysis between your company's figure and the competitors in the industry's figure. So you will get the answer whether to do normalizing adjustment or not after you have compared your company's figure with your competitors within the same industry. Let's say if it is after you have done the comparison between your company's figures with the other companies within the same industry, you find out that the figures is more or less the same, then maybe you have to decide that in this case, no need to do any normalizing adjustment. So normalizing adjustment is normally need to be done if there are a huge difference in terms of figures between your companies and your competitors within the same industries. If the figures between your companies and your competitors is more or less the same, then you no need to do the normalizing adjustment. So that is the justification lah on how to decide whether normalizing adjustment is needed or not for the case that you are doing now for business valuation. So this is again the normalizing adjustment for other consideration for your income statement. So you sometimes you may need to do some normalizing adjustment for your cost of sales, for your officers' compensation, for your salaries, travel and entertainment. And maybe some of you may not be aware of that for some company, they have their travel and entertainment allowances for some of their staff, depending on your level lah. Normally for the top management level, they will have some travel and entertainment allowance. So if the amount of travel and entertainment allowance for your firm is higher than the average within the industries, then you may need to do some normalizing adjustment for the travel and entertainment allowance for your company. Same with your rent, professional fees, employees benefit, blah 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 blah. For some companies, they may have a better employees benefits as compared to the other companies within the same industries. So the reason or the logic behind why we need to do the normalizing adjustment is to make sure that our companies are at par or at the same level with other competitors within the same industries. We don't want that our company is so special that the figure for our company is far behind or far ahead of the other companies within the same industries. So that's why we need to do some normalizing adjustments sometimes for certain cases while we are doing the business relation. So let's move to the law. Discount for lack of control. So how do we determine the rate for discount of lack of control? I think for your slide purposes, maybe I need to put it in full here lah, discount, and I put in bracket law just to make sure that some of you will be familiar with the term. So we put here discount for lack of control, and we put in bracket DLOC. Yalah. So DLOC or discount for lack of control. So it is stated here from a controlling interest perspective in a valuation, whereas the target equity interest is at minority level. The law should be considered. So what does it mean? If what? Dia kata apa? From the controlling interest perspective in the valuation, whereas the target equity interest is at minority level, DLOC or discount for lack of control should be considered. So if the interest that you are valuing is the minority interest, minority shareholders, which doesn't have any control over the company, so you should consider to give some discount for lack of control. I'm not sure whether you all are aware of or not. In some companies, there are a minority and majority shareholders. So if for minority shareholders ni, definitely they will have no control over the company. So that's why we need to give some discount for lack of control when we are valuing their interest. So the valuation techniques for discount for lack of control measurement are classified into empirical studies and court cases reference. So in order to determine whether the law will be involved in the variation or not, and how much discount should be given. So court cases and empirical studies will be used as our reference. So if there are any court cases that we can refer to, we should refer to the court cases. If there are no court cases, we may need to use some empirical studies as our basis of determination for discount of lack of control. So it is quite tricky. Even the most experienced valuator out there who are doing business relations may sometimes confuse and have some problems in determining the discount rate ni, lock rate, discount for lack of control rate. So it could be some argument out there on how many percent should be given for the lock or discount of lack of control. So that's why in order to avoid any problem, any confusion, so normally we will refer to any court cases, if any. So if it is no court cases available, so we may need to do some analysis on empirical studies or case studies lah, to determine the amount of rate for the law, discount for lack of control. So unlike the law, dia kata apa, unlike discount of lack of marketability, there is no generally accepted financial modeling developed for the law quantification so far. So what does it mean? It means that for the law, it is easier lah. It is much easier to decide the rate for the law compared to the law. Meaning that for any lack of marketability, it is much easier to decide the percentage as compared to lack of control, because lack of controlling is quite difficult to measure. For discount for lack of marketability, there are generally accepted financial modeling that can be used. But as far as discount for lack of control is concerned, there is no accepted financial modeling developed yet. So that's why it is quite difficult lah to determine the discount rate or discount for lack of control. Sebut pun berbelit-belit lidah. The range of discount for lack of control is general falls between 15 to 40%. So this is the general rate lah that is being used in the industries as far as discount for lack of control or DLOC is concerned. So normally in the industries, the percentage is ranging between 15 to 40%. But you need to decide lah. If you are using 50%, you may need to give some justification. Why 15%? Let's say if you decided 40 or 30 or 25%, you may need to have some logic reason to defend your figure. So let's say if the case is brought into court, you may need to define 15%. Why 15%? So you may need to have some justification, some evidence to show that the amount or the figure that you are using is the correct figure. Let's move to the next slide. So discount for lack of control rate. So approach, measurement, rationale, empirical studies. So we may use empirical studies as a basis to determine the lock rate. So premiums paid for acquisition of listed entities compared with trading prices of the listed entities prior to the acquisition announcement are studied. For example, merger stake studies. The court cases references no universal consensus and depends on precedent cases in each jurisdiction. So as far as court cases references, there are no universal consensus or mutual agreement on the use of court cases as a basis of determining the lock rate. But it depends on the precedent case yang lepas-lepas in each of the jurisdiction. So maybe let's say if you are valuing a business in Malaysia, if there are any court cases in Malaysia that you can refer to, you need to refer to the court cases in Malaysia as a justification or as a basis of on how to determine the rate for discount for lack of control. So it is normally related to public companies. When you are valuing a public companies, there will be some issues on discount for lack of control, especially if you are valuing for minority shareholders. So for minority shareholders, they don't have control over the companies. The only control that they have in the companies is during the AGM, annual general meeting. Other than that, they don't have any say on how should the companies operate as compared to board of directors. As you all aware, for a public limited company, normally the major shareholders will be appointed as a board of directors. So as a board of directors, you are involved in the decision making of the companies. So if you are valuing the board of directors or the shareholders' interest, there will be no block involved in the valuation. But if you are valuing the minority shareholders' interest, then of course you need to consider discount for lack of control. And you need to decide lah, how many percentage that you need to give for the log. So as mentioned in the previous slide, the normal rate used is between 15 to 40%. So you may choose lah whether to use 15 or whether to use maximum 40. Whatever the figure that you have chosen to use, you must have some evidence or justifications to back up your figure. So that's all about the log, discount for lack of control. Do you have any questions? Any issues with discount for lack of control? Any questions? Anybody? Or already hungry? Before my class, you have class with Dr. Haas, right? Law. I understand. Being a student is very tiring, kan? You have to attend one class after another. Chua is already thirsty. Tak buat apa-apa pun thirsty, Chua. Okey lah, Chua. Betulkan rambut. Okey. Brian, are you okay, Brian? Itu 3. Macam ni okey. Okey lah, let's move on lah. Kan? Semua orang tak nak bertanya, semua orang tidur, semua orang dah off dah kamera. Sekejap lagi saya nak check siapa off camera, saya nak tolak markah. Saya dah print screen dah gambar-gambar you all, siapa yang off camera, siapa yang still on camera. Lavia dah off tadi 5 minit, nanti kita tolak dia markah 20. So this is the DLOM rate discount. Discount for, I'm already hungry. I have another class from 2 to 4 today with first year. Discount for lack of, M stand for marketability. Sikit. Okay. So discount for lack of marketability adjustment generally falls into a range of 20 to 50%. Wow. It's higher, right? Just now for the log, the rate is between 15% to 40%. But for the log, the range is between 20 to 50%. So just imagine if the same company you have to deduct discount for lack of control and lack of marketability. Let's say you deduct 15% for the log and 20% for the log. So altogether 35% will be deducted from the value, kan? So it is quite a high figure. So depending on which measurement technique is used, the resulting discount for lack of marketability has a different level. Sometimes a valuator, so for a business valuation, we don't call the person who is doing the valuation as a valuer. We call it a valuator. Because as I mentioned last time, not everybody who is doing the business valuation is a valuer. Some of them is an accountant, some of them is a lawyer. So that's why we don't call them a valuer, we call valuator. Because as far as board of valuers, estate agent, appraisals and property management is concerned, the act, according to the BOVIA and the Valuers Act, only those who are registered with the board can call themselves a valuer. So if the valuation is done by an accountant, so that's why we don't call them valuer, we call them valuator. So sometimes a valuator will base a decision as to the choice of marketability discount on previous court cases. So again, same with the law. If there is any court cases that we can or we could refer to, then we should refer to the court cases as far as how to determine the rate for the law is concerned. So if there are any cases which can be used in order to decide the law rate, you need to use the court cases. In the situation whereby there is no court cases to refer to, then we may use any other means to decide the rate for the law, discount for lack of marketability. So for example, the evaluator will review the result of several cases such as Accord, Lapo, and Piracu. Then the choice of discount on the discounts accepted by the court in the review cases. What it is trying to tell us is if there is court cases to refer to, we need to scrutinize lah. We need to study the court cases before we decide on the percentage to be used for the law for our cases. So for example, the range of court cases might have been from 20 to 25%, so that the evaluator chooses 22.5% with the rationale that his valuation subject is similar to the subject under consideration in the case cited. So you may want give some reason lah. Let's say if you choose 22.5%, you may need to give some evidence on why the rate is chosen for your case. So for as far as court cases is concerned, sometimes judge found to adopt this approach as well. So the judge will look at the previous cases, and then based on the judge analysis, and he will decide lah on the percentage. Sometimes the court cases will be used as a basis of determining the rate for the law. So that's all about the law. The law very simple. Dia two slides saja which explain about the law. So it is easy to say lah. Whether it is the rate for the law or the law, or if you want to decide the rate for discount for lack of control or lack of marketability, normally the best case or the best basis to be referred to is the court cases. But in the case that there is no court cases to be referred to, you may want to use the other method or approaches in deciding what rate to be used as a discount rate for the law and the law. We need to for the cases lah. But in most cases, they will refer to this case court cases. So they will study what the judge has say in the court case, and then court case ni will be used as a basis to determine the rate of discount for your business relation case. So this is WACC. So WACC and CAPM, Capital Asset Pricing Model, is also being used in the business valuation. I think for the WACC and CAPM ni we will continue next week lah for WACC and CAPM, Capital Asset Pricing Model. So as far as today's lecture is concerned, we will stop at the law. So before midnight tonight, I will give you some tutorial questions on financial ratio and on the law and the law. So we will discuss the potential answers for the tutorial during our tutorial on Wednesday morning. So for the latecomers, as I mentioned earlier, before we start our lecture just now, for Wednesday slot, I could only be able to do tutorial for 1 hour because I have to attend online workshop on e-learning from 10 to 1 o'clock on Wednesday. So by right, our class on Wednesday is 9 to 11, but we will only do it for 1 hour, 9 to 10. So please don't be late lah. 1 hour lecture, you join the session late, half an hour, and you can only join the session for half an hour. So try to be on time. So if our class start at 9, try to join the class at 9 o'clock. Okay. Tadi Fawaz lambat sangat, dah dekat nak sejam ke sejam setengah lewat, tak tahu gimana. Tanam padi ke, membanting padi ke, tak tahu. There are some small children playing in front of me in this house, so maybe it will disrupt our lecture today. Okay. Do you have any questions to ask? Lavia? Tak ada. Lavia senang je kau. Kau asyik geling kepala je kan kerja kau. Brian? Do you have any question to ask Brian? Kalau Brian tak ada kelas, habislah. Kalau Brian tak ada soalan, habislah.
Sezu. Last time you said we can refer to the past year papers to see the trend of the question, right?
Yep.
But I have gone through the past year and I found that only 2 years the syllabus is, I think 2018 and 19 is 2019 and 2020 similar to us, but before 2019 the past year paper, the business valuation is different. It's like the last year valuation, last time valuation.
If you look at the past year questions, we only started to offer this business relation as one subject 2 years ago. So previously, business relation is being taught as part of the special properties or special valuation. It is not under one special subject. So only started in 2018, we offer business relation as one subject. So that's why you couldn't find any paper on business relation on its own before 2018. So this subject is considered a new subject. We just offered this subject 2 years ago. And then for the past 2 years, this subject is being taught by a part-timer, Surveyor Anwar Hussein from TNB. But starting from this year, since UM don't have money to pay part-timer, so that's why this year I have to teach this subject with Dr. Zai. Because if we were to employ part-timers for one semester, we have to pay them about 8 to 10,000 ke 5 to 8,000 for one subject for one semester. So UN don't have money anymore to pay part-timers. So that's why we have to teach. After all, this is only very, very, very basic lah, basic. Just introduction to business relation. Same with your valuation subject lah. Even though you may feel that you have learned a lot during lecture, but when you practice out there, you may find that whatever knowledge that you have gained during the 3.5 years course is not sufficient, not enough. When you are working, still new things to learn, new things to catch up while you are in the industry. Because like doctors, when you study in class kan, based on case study how to perform operation kan. During the lecture tu maybe there is no complication, but when you do the operation yourself, maybe ada complication, bleeding